Hi, the recent war between Iran and Israel has made the client very much anxious about the stock market, and their concern is valid also. Because if the oil prices will rise, then it spoil the fundamentals of Indian economy. The fiscal deficit and current account deficit ballooned, and it is not very much good situation for a FIS to make investment into the stock market. But it looked like that this situation is behind us after Trump has put a ceasefire on the war. Now there are two ways to look at this situation. One is that how the market is reacting, especially the oil market. So if we look at the oil future of 6 months to 12 months, we see that the oil prices are at the pre-conflict level, which state that if the spike happen, the spike will only be a temporarily upward movement. It will not long last at a high price for the longer period. The other way to look at is, what if the Iran respond? Now here the question comes that what is the capacity of Iran to respond back? I think the capacity of Iran is weakened in this recent week. And if the war escalate, it will not escalate to the tune which will block the Strait of Hormuz. And in that situation, the oil prices will go up till 90 to 100, which is okay for the Indian economy, which is not a very troublesome situation for the Indian economy. The other key factor which we have to consider is the demand and supply of the oil. So if we look at the pre-war level, the supply of the oil was already high compared to the demand, and that's why the price was hovering around $65 per barrel only. Over and above that, these OPEC companies are considering to increase their production, so which will further increase the supply. So demand and supply dynamics do not support the high price of oil. So I think the oil story is behind us, and the road to the stock market moving upward is now clean. What we need to look at is the valuation of the stock market. So if I look at the valuation of the stock market, the forward P, 1 year forward P, is nearly 21x, which is not very much overly overvalued for the countries which is fastest growing country, one of the fastest growing country. So there I don't see any concern. The only one concern which the stock market has, which is a sword hanging on the stock market, is the oversupply of the shares, which is happening from the IPOs, QIP, and a lot of businessmen selling up their shares. So if the supply of the shares will be higher, then the new money, which ideally should increase the price of the existing shares, will route to the new shares, and the stock market will remain at that level. So I would suggest all the investors to remain cautious about the risk and be knowledgeable about the stock market and keep making the investment. Thank you very much.